Hello and good evening. Today I'm going to be talking about trading. In particular, I'm going to be talking about financial trading. So I'm going to share my screen now and I'll get right into it. Just showing my screen and here we go. So if we go right to the beginning, it's taking some time to respond. Okay, here we go. So we're talking about trading. Once again, my name is Tola Ariola. I'm a coach, speaker, and trainer with the John Maxwell team, and we're talking about financial trading today. What is trading? What are the risks involved in it? That should say, what are the risks? I do beg your pardon. Editing skills required here. What are the risks involved in trading? And what are the qualities of a trader? Now, we'll also talk towards the end about the benefits of trading. So let's go into it. First off, I want to talk again today about the law of consistency. The 15 invaluable laws of growth talk about the law of consistency. And it states that motivation gets you going, but discipline keeps you growing. Motivation gets you going, discipline keeps you growing. So in terms of trading, it is really very important that consistency is one of the tools of a trader. How to be consistent and disciplined, know the what, the how, the where and when. And I want to add also that the law of awareness is important. So the law of awareness talks about where am I today and where do I hope to get to. So we're going to be talking about trading in its basic form. I'm not suggesting that I'm a professional trader. I've done a bit of research and I've been involved in trading for a number of years now. Not directly, but I use various platforms and I'm just going to. So this is basically a knowledge share about what I have discovered over the years as I've been involved in trading, and also highlighting the benefits that we can get from trading in the financial markets. So let's get right into it. If my thing decides to work. So what is trading? Trading is simply buying and selling. Just as the name suggests, when we talk about trading in real life, it's buying and selling. In the same way, financial trading is buying and selling of financial instruments, if you like, financial products. So what are these financial products? Stocks, bonds, commodities, derivatives, mutual funds, and currencies. Now you can research on all of these ones. So when you talk about stocks, we're talking about shares in companies. That's a term that we're quite familiar with. Bonds are also financial instruments. They are assets. Let's just say that they are assets and they have financial value. So you can buy them and you can sell them, and they are recognized as financial products and financial instruments. Commodities are more down to earth. So think about things like gold, silver, in any form that you can. Think about commodities, even like rice, coal, mercury, things like that will fall under the category of commodities. They are also regarded as financial products, financial instruments. They can be traded on the open market and they can be traded for profit. Derivatives, that's becoming a bit more technical. So derivatives are instruments that have an underlying asset. So derivatives, you can say maybe they are like paper instruments, but they do have an underlying asset. So the underlying asset can be a share, it can be a bond, it can be a mutual fund, it can be commodities, it can be anything. But the derivative derives its value from that of the base assets. Then you talk about mutual funds. They can be a collection of funds, if you like, of shares, of a diversified portfolio. So you can have shares, you can have cash elements, you can have savings accounts in there, and they're referred to as mutual funds. And then you can have currencies. So we have GBP, which is the pound sterling, USD, which is the US dollars. You have JPY, which is Japanese yen, and you have many other currencies like that. And they can be traded against each other. So when we look at trading in this light, understanding that commodities can be traded, they can be bought and sold. So the trading of currencies is not so far-fetched. They can be bought and they can be sold. I dare say, if you've gone on holiday and you've taken maybe your pound sterling card, bank card, and you go to somewhere like Canada or US and you withdraw dollars at the cash machine, you've actually traded in financial currency. And that's one currency trading against the other. So the GBP is trading against the US dollar is trading against the GBP. And you can trade in different capacities. You can be an agent, you can be a hedger, you can be an arbitrager or a speculator, or you can trade as an individual trader. All these people have different capacities. So the banks trade, sometimes they are agents, they are hedgers, usually speculators are like professional traders, and then you got the individual traders as well. So any one of this can be how you enter into the market. The insurance companies also trade because they have a lot of their assets or a lot of their cash flow tied into the stock market or the financial markets. What are the risks involved in trading? A lot of people talk about risk and they say the prices can go up as well as come down. You can lose money on it as well as gain money. Yes, there are a lot of risks involved in it. So exchange rate risk. So as we have said, you're trading one currency against the other. So even if you're not trading currency, let's say you're trading commodity and you're buying rice in Japan, for instance. So their base currency is Japanese yen, JPY. And you are based here in the UK. So your base currency is pound sterling, GBP. So you're using your GBP to buy a commodity that is priced in JPY. So there is an exchange rate risk. Because when you transact that business, they could say, okay, the price of this bag of rice is X amount in JPY. And you calculate that and you say, okay, that is Y amount in GBP. That's fine. But exchange rates are fluctuating all the time. They're moving, they're going up and down, up and down. So even though they quoted X for you, by the time the deal is to be concluded, maybe you have moved to X minus 2 or X plus 2. Therefore, the Y amount that you put together in GBP, pound sterling, probably is no longer enough. So that means that that transaction has suffered from an exchange rate fluctuation. That's what we refer to as exchange rate risk. There's also interest rate risk. So for instance, you put the money in an account or you transfer your pound sterling or your USD into a JPY account. Now, not only are you exposing that money to exchange rate risk, you are also exposing it to interest rate risk because the interest in one country of origin to the country of destination may differ. So when you're transacting across borders, interest rate is another risk that we have to contend with. There's also the credit risk. So if you're using credit facilities, that creates its own risk on its own. There's the country risk, which I've alluded to. So is there security in that country? How are financial transactions conducted in that country? What is the risk that there could be a change of government and everything could just go pear-shaped? So there is country risk. There is liquidity risk. So you're transacting business with perhaps an organization, perhaps another individual. What if their liquidity is at stake, or they become bankrupt or go into administration? How do you conclude that transaction? What have you put in place to mitigate that risk, to help you overcome that particular risk? There's marginal or leverage risk. Some of these terminologies we may need to research in more detail to have a basic understanding or an in-depth understanding of the risk that are involved. Transactional risk, the risk that the transaction itself does not go through. So you may have remitted money by, bank transfer, letters of credit, whatever ways that credit is passed from one location to the other, and yet the transaction fails. That's transactional risk. And then the risk of ruin, the risk that whatever it is that you're putting money into doesn't actually give the yield that you were expecting, or they say it's commodities, for instance, the crop fails. Nobody could have predicted that. Nobody knew that that was going to happen, but that is a risk. So there are a lot of risks involved in trading. Even in physical trading, where you buy and sell in the open market, there is risk involved in that. You might stock items and they are no longer required and they become obsolete. So when you're now talking about financial markets, it becomes even more prone to risk. Now, what are the qualities of a good trader? Given all that we now know about trading, what would you say? And I want this to be interactive, so I'm going to come out of this moment. Hi, Ma, can you hear me?
Yes, I can.
Okay, good. I wasn't sure you could hear earlier on. So, what would you say are the characteristics of a good trader?
Oh, are you asking just me?
Yes.
Okay. A good trader. Well, that's a huge question.
Yes, it is.
A huge question. I mean, we could go on forever. The first characteristic that hits me is ethical.
Mm-hmm.
You have to be a person of integrity.
Mm-hmm.
And that includes obviously having mental head knowledge of what you're talking about, but also yourself, how greedy you can be. I mean, what can trigger this or that, your emotions, level-headed, but also your environment, who you're dealing with, and whether those people are integrous, what's happening socio-culturally, politically, economically, because a lot of people are pulling the strings. So what's your position? Obviously being organized, discipline, like who is in your team, because you need to delegate. I mean, this could go on forever. It's yeah, you got to have very much analytical mind, as well as a team person, and communication skills. You need to have kind of a team around, I suppose. Be a people's person sometimes, an individual person sometimes, a private person. Separate the public from the public and private. So see, like from eagle's eye, the whole picture and how the pieces fitting together. So you need to have eye to detail, as well as an eagle's eye to see, where your responsibility to deal with these assets. Is it human trafficking or slavery involved? And we're dealing with a huge thing when you're dealing with a lot of money. A lot of money means a lot of power, and also a lot of responsibility. A lot of people with the power and are not showing responsibility or accountability for damaging the planet or other people's conditions, living conditions. So we have to act responsibly, that we don't own any assets. The planet was here and everything in it, including the people and the crops. And we just have to have that ethics throughout our entire being. And who we're dealing with are immature people that really mostly don't know what they're talking about, putting a lot of fear in everyone. And if we come across those resources, we need to act differently. This is the whole purpose of having dominion, which is acting responsibly with the wisdom and the knowledge that surpasses all understanding. That's all I have to say.
Thanks, Ma. I'm sure you could go on if I let you. So we are talking about the qualities of a good trader. So considering the risks that we've identified, it's important, you know, like Ma said, a good trader needs to be disciplined. They need to be disciplined. So apart from having the technical knowledge, the head knowledge, there has to be discipline to carry out what they know. Because even where the head knowledge is there, if there is no discipline, then the trader can, you know, go off track or be greedy and say, okay, just one last trade, just one more thing, just this one, and then it goes pear-shaped. So they must be disciplined enough to have a plan and to follow that plan. You know, I've had this said before. It says, trade the plan and plan the trade. So don't just go into a trade arbitrarily and say, oh, what do I do? What do I do? What do I do? Plan the trade, first of all, and then trade the plan. Don't go outside of that plan and start doing this on the side and that on the side. So discipline, then patience is also related to discipline. The patience to actually see the results come through. So when you have a plan, the results may not come through like immediately, like, you know, the first trade you put in. You have to be patient enough to walk that plan and see it come true. You also have to be adaptable. So yes, you have a plan, you've structured it, but you can have within that plan that says, okay, if this happens, we'll go in this line. If that happens, we go in that line. You must be adaptable. You must be able to take decisions when you're required to. It's not that, you know you need to take a decision and then you start dilly-dallying on it. Should I, maybe not, perhaps, you know, and then that moment passes and you would like, oh my goodness, I could have, you know, I could have made a profit of, say, $10,000 with that one trade. You have to be able, and that calls for mental toughness. You have to be somebody who is of sound mind. You have to be independent, you have to be forward thinking, you have to be confident, have numerical skills. So ability to analyze. You have to have IT skills, because these days nobody does manual trading. Everything is via softwares and apps and or whatnot. So you have to have that confidence and the numerical skills, the IT skills, to be able to carry out those trades. You have to have communication skills. You have to have an interest in financial markets. Some people don't. Some people cannot sit at their computers and be watching trades and making sure that they perform properly. Some people can't do that. You know, so you have to have that interest in financial markets. We've talked about analytical skills, interpersonal skills. Ma mentioned that, team working skills. So if you work for maybe like a large organization and you've got a team of people, you have to be able to work within your team. Maybe one person is responsible for one aspect, another person is responsible. You have to be able to work together to ensure that you are making the maximum on behalf of the company and on behalf of clients. So that's what makes a good trader. There's a lot in that, isn't it? We've talked about the law of consistency. Now we're talking about the law of awareness. The law of awareness says you need to know yourself to grow yourself. So you need to know where you are on this journey so that you can improve on it. Now I'm going to talk about, before we go on, I'm going to stop sharing a minute. Oh, I thought, what's her name came in a while ago. Odunayo, what happened to her? I'm going to send her a quick message and see what happened to her. I thought she logged in just now, and I accepted her. So, what happened?
I actually came on my tablet and you actually removed me.
Yeah, because I wasn't sure that you could hear me, and I was talking and chatting in the chat box, and I couldn't. I thought maybe you couldn't hear or see anything.
Oh, no,
Anyway.
would have said otherwise. I think I went to fetch the charger because it was in need of
Oh,
charging.
I see. Okay.
Okay.
So, I was going to ask, how much of trading have you done? Have you had any experience? I thought she was still on the call, but how much trading have you done? Have you had any experience of doing anything as far as trading is concerned?
Sorry, who is you asking me?
Yes.
Oh, me. Actually, you wouldn't believe it, but it was back like 15 years ago when I was in touch with a programmer who was into trading, and he was the one who talked to me like he was getting into trades, and he and I were kind of looking at it, and I was encouraging him. At the time, it wasn't the right time for me because I had a lot on my plate, but I kept encouraging him to continue, and I
So
told him,
have you done any trading yourself now?
no, as I said to you, I am with investment companies that do all the trading for me, and I
Mm-hmm.
just, but I would like to, I know it's such a big task, it's not that easy to do it properly. So it's not something that I can do just right now. And I will get to it. It's just I'm having to deal with things first.
Eh,
But yeah,
and that's perfectly okay, because, like I said, it's all about being aware of where you are. Like, I don't trade directly. I'm involved in trading, but I don't trade directly either.
exactly.
The reason being that, some people have more patience with these things than others, and also the time, you must be able to dedicate time to it and say, this is what I want to do, no distractions and everything like that. So what I have opted for as a person, I use automated trading platforms. Now, I'm talking about platforms here. There are different platforms. I mean, some of them may not even be known to me. For people who want to trade by themselves, there's the MT4 platform where they can trade. Now, you can start with a demo account. With the demo account, you can do anything, you can trade. Because it's demo, it's not real money, but at least you can see, okay, if I had placed this trade with real money, am I going to be making a profit or am I going to make a loss? And with that, you can practice until you hone your skills properly. So I would advise anyone who wants to go into trading, start off with demo accounts. Most of the platforms or the brokers will allow you to open a demo account. You can practice with that as much as you want until you gain confidence. For me, I use different platforms, and I've listed a few here. So Revolut is a card-based account that you can use for your savings, and you can also use it to trade in shares. So I've given a referral link there, and I just want to say, for all transparency there, that by virtue, I'm not quite sure each one of them, but by virtue of referrals, there is the possibility that the person with the link will be getting some commission by referring another person. So that's just a blanket statement for all the referrals there. So that's Revolut. You get a card even, so you can take it to the shops and you purchase your groceries and all the normal things that you would do. But you can also trade on your app. You can buy shares. You can buy, shares that cost maybe about $2 something. So all share prices are listed, and you can go through it and trade on the Revolut app. Wirex is another one that offers you a card, and this one allows you to trade in cryptocurrency. And I would say that if anyone wants to use this, they need to start with very little money to kind of practice with it and see how it begins to yield. And then before they decide to put in any more money. One of the rules of trading, or, you know, I don't know whether it's a rule indeed, is you only invest what you can afford to lose. So if anything were to happen, the system goes down, the transaction fails, all these risks happen, you put in an amount that, okay, if I lost that money, it's not going to adversely affect my lifestyle as a person. So that's what I would advise using Wirex. Cash FX is trading in foreign exchange. And what they offer is, on average, about 1% on a daily basis, Monday to Friday. Foreign currency only trades Monday to Friday, not on the weekend. And with Cash FX, if you invite somebody to join, you also get what is known as network bonuses by inviting other people to join. PGI, Praetorian Group International, trades in cryptocurrencies, and the cryptocurrencies, this one trades daily, so Monday through to Sunday, and they average between 0.5% to 3% on a daily basis. 0.5% to 3% on a daily basis. In that case as well, if you refer somebody with your own link, you will get direct referral bonuses as well. Coinbase is what you would call a wallet. So most of these accounts like CashFX and PGI, they use Bitcoin to fund the account. So Coinbase acts as a Bitcoin wallet. So it's a wallet. You can trade on there as well, but mainly what we use Coinbase for is to send money and to receive money. So when you want to get your withdrawals from CashFX or for PGI, when you've made some profit, you also withdraw it back into your Coinbase account, and then from your Coinbase, you can transfer it directly into your account. And I think it's a one-off thing. If you invite somebody to join, they will give you maybe, I don't know, whether it's about $5 or something like that. So that's something that you can look into. So these are the platforms that I have used and I am familiar with, and I can therefore recommend. I am sure there are many more other platforms out there that one can use. So just to summarize, trading is buying and selling of financial products, financial instruments, including foreign exchange, including cryptocurrencies. It could be as far-fetched as commodities. It could be, you know, even things that are staple foods like cash crops, gold, silver. They are being traded on a daily basis. So a lot of people talk about trading. It's possible that it can give a passive income. So for instance, the automated systems that I use, I don't have to do anything. All I need to do is log into my account, and if there is any profit in there, I withdraw it. So it is completely residual. I can go to work, do my own thing, run my other business, and I know that that one is ticking over nicely. It is completely passive. I don't have to do anything about it. And that is why I opted for the automated system. So the benefits are that you can get an income from it, you can get passive income, you can invite other people to it and help them to get sorted out as well. Financial transactions are happening on a daily basis. Why not you benefit from it as well? So if this is something that you would like to look into, I would say give it a go. Look at all of these websites, and whichever one that catches your fancy there, you can review it, register with it. A lot of them are free to register. Once you've registered, you know, you can then decide whether or not you want to trade with it. So I'm going to put this in the chat box, and if there's any question, I would take some questions now. Bear with me. Oh, what have I done? Hello? Okay, I thought I'd
Yes,
lost it.
we're here.
I thought I'd lost it. Okay, what's chatting? Okay. So, okay, I've put that in the chat box if you want to have a look at them. Yeah, okay. And I'll just go back to so any question for me?
No, very good.
Okay. So just to round off then, thank you very much for your participation. And once again, if you can provide feedback, and it is bit.ly/feedback2Ariola. Once again, I'm offering my coaching services for a month at $49.97, which is a fraction of the cost. It usually costs £150. I have a social media training, which is coming up on the 19th at 5 p.m. That goes into a lot more detail about social media, talks about the tools, the demographics, and how to actually use social media to generate an income and engage with your prospects. So if you're interested in any of those things, please indicate your interest, provide your name, email address, and phone number. Also, visit my website, which is www.johnmaxwellgroup.com/Tola www.johnmaxwellgroup.com/Tola. And that will be it for today. Thank you very much. Any questions, any last words before we round up?
All good. All good here.
All right.
Okay.
I was expecting a few more people to come, but that notwithstanding, it's fine. What I will do, because it's been recorded, I'll send the recording to them so that they can participate in their own way as well. Did you get the recording for yesterday?
I have to actually watch it. Thanks so much for recording everything, because we're all in the same boat here. We're super busy, and sometimes meetings clash all the time.
Yeah. So there was a